Hello, and welcome to the Motor Trade Radio podcast, powered by Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the car retailing sector, from factory to forecourt.
Well, we can't moan about the hot weather this week, Curtis. It's certainly taken a bit of a turn, because I think we've certainly got the wetter weather up here in the north. I'm not sure what it's like down in the south.
You know what? We've had a bit of rain for the first time in, what seems like months. And it's at least several degrees cooler this week recording than it was this time last week. So, I'm starting to enjoy summer again.
We'll be moaning about floods now instead, as the weather, the ground can't take the water. But never mind, we're not a weather station, so let's not get too in depth with the with the week's weather. But we have got a couple of big shout outs this morning, and some great headlines to get through, haven't we?
We have indeed, yes. So during the week, we caught up with Robert Forrester, CEO of Vertu Motors, for a special episode which was really focused on his views on the ZEV Mandate consultation, which was actually confirmed by the government at the end of last week, unhelpfully, just after we'd recorded last weekend's pod. So we'll have an extract from that in today's episode, but we both urge you to listen to the full interview, because Robert had lots to say about the ZEV mandate. I mean, it was very topical, some great thoughts and insight. Plus, we were able to ask him about the September plate change, yes, which is now looming, and he was able to shed some light on the state of play within Vertu with September.
Yeah, and as you say, it never disappoints, and in terms of that value and content that we had with Robert, and as we'll have a snippet of that interview. Chosen quite a good one, but I'll let you listen to that, Curtis, when we get there. But so we do urge you to have a listen to the full interview that will be in your podcast feed from earlier on this week. And the other shout out is that and conscious there are a lot of award events now in the UK automotive sector, but there is one that is coming up. And I know from speaking to the team there that they have extended the deadline for nominations, and this is for the National Business Motoring Awards, that the entries are now open. It is being organised by Astor Media, who are the publisher of Business Motoring and Motor Trade News. Obviously, we do cover a lot on this podcast, and with businesses, with business motoring, undergoing rapid change. The 2026 awards will shine a spotlight on organisations demonstrating innovation, leadership, customer excellence, technology, and sustainable solutions. And the awards evening is taking place at the end of November, and we'll put a link to it in the newsletter on Monday morning. But it's down at the Coombe Abbey Hotel for the awards evening there in November. So if you are looking at nominating yourselves or another business or somebody within the organisation or a service, then I say we'll put a link to the awards on Monday's newsletter for you to enter.
If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers and decision makers on one of our Motor Trade Radio supplier special episodes, then get in touch at motortraderadio@yahoo.com.
Companies already featured in our supplier specials include Autoglim, Lifeshine, Impel, ETT, Generational, MTC and Jigcar. And if you'd like us to profile your business, then just message us at motortraderadio@yahoo.com.
You're listening to the Motor Trade Radio podcast, powered by Cazoo.
This week's headlines come from AM, Car Dealer, the Financial Times, and Autocar, starting with the much-mooted ZEV Mandate consultation has been launched, with the review likely to see a softening of electric car sales targets. Pinewood.AI's proposed acquisition has been recommended for approval. Mitsubishi's return to the UK has gathered momentum with the announcement of 24 dealer appointments. Then, after the break, JudgeService announces the top performing OEMs for brand loyalty. Arnold Clark completes the takeover of a long-standing family-run dealership in Glasgow. And Chinese automaker Chery to open UK R&D centre in Bedfordshire.
You're listening to the Motor Trade Radio podcast, powered by Cazoo.
So as Curtis said there, and extremely topical, we're heading over to Autocar to begin with, and this is the ZEV Mandate consultation launched. Review could soften electric car sales targets, saying that the review will look at softening EV targets from 2027 to 2035, as industry argues they aren't achievable. Now, obviously, we have got a snippet from Robert Forrester's interview that we did this week, which segues nicely into this, which we will share after this. But yeah, I mean, this is kind of welcomed into that. This consultation's been brought forward, and it's kind of the risk is that this could soften this trajectory of this transition to EV, but I think it would be welcome for everybody within the sector that is feeling the pain at the minute.
Yeah, and the most welcome thing about it is that we don't have to wait until next year, which is when it was originally scheduled to take place, this consultation. And the deadline's been set for the 23rd of October. So, it's not a huge amount of time, but enough time to get things discussed and hopefully agreed with some significant input from the automotive sector and stakeholders. And the Autocar piece, I mean, it's worth looking at because it's very detailed. They go into the history of the ZEV mandate, where it's come from, where we are now. And, it does set us up quite neatly for our interview with Robert Forrester, because this is really what we concentrated on, wasn't it? His immediate reaction on the consultation process, and I guess more importantly, what he and the industry, the car retailing sector, would like to see included in it.
Yeah, I mean, like you say, I mean, we're not sure what will happen. I mean, obviously, there's rumours that they may soften it, they may push some of it back to 2035. There's conversations taking place around where hybrids and plug-in hybrids are incorporated within that deadline as well, and whether it will be that pure diesels are ended early. And so there's a lot discussed with this, but I think to your point, Curtis, the fact that it's being brought forward is positive, and I think there's and I say with the full interview with Robert, and it's not on today's snippet, but he does cite that gives a little bit of optimism, even though we're unclear of what the consultation will result in. It gives that sector a little bit of positive view of opportunities that the end game remains. This transition to electrified marketplace, but it's the timing of this that they are really looking at. So what we'll do, like Curtis said there, it's a detailed story in Autocar, worth having a read when you get your link on Monday morning. But we will play the extract from Robert, and then we'll have a chat about it afterwards. To begin with, let's start with some context on how the ZEV mandate is currently impacting the car and van retailing sector, and yourself, Robert, as the CEO of one of the UK's largest franchise dealer groups. I mean, what impact is the ZEV mandate having on your business?
Well, you'd have to live on the moon not to understand the impact of the state intervention in completely upending the normal rules of capitalism, where supply and demand dictate how much is produced and how much is sold, and the price at which it is sold at and it works very, very well. Adam Smith was not incorrect. What we've actually ended up with is, unfortunately, a complete lack of understanding of basic economics by the government, aided and abetted by quite ideological lobby groups, particularly around EV charging, actually, that imposed on the UK sector. But in fairness, there were not dissimilar arrangements in America and Europe at one time, which says you have to sell more electric vehicles or you have massive fines. And the impact of that on normal demand and supply curves, as anybody who studied economics will say, it causes massive dislocation. In the case of the UK market, which had the most vicious targets and the most vicious fines, it therefore had the most vicious impacts. And the upshot is that everyone's had to sell electric vehicles at massive discounts to try and create demand to get close to the targets, or be faced by £15,000 or £12,000 a vehicle fine, depending on cars and vans. And actually, cars were £15,000 at one point. And the upshot is everyone has had to discount massively, and the profit pool for the automotive sector, from parts all the way through to retail, has been significantly eroded, and that has an impact on jobs, viability, investment, and the UK automotive sector has not turned up in terms of driving economic growth in the UK, as have many other sectors not turned up for not unknown reasons. Government policy has been delusional, and this consultation is a good acknowledgement of that. I don't think it's the end of the story. I think this is an ongoing thing we've got to do. But the sector would have faced catastrophic scenarios had something not been done. Now, nothing's been done apart from a consultation, but the direction of travel is broadly clear, and it's to be welcomed.
And I mean, obviously, we've had the electric car grant, which, look at quite a significant amount of money from the Treasury to support the growth.
Oh, not me. No, not the money that was put on the table was a drop in the ocean compared to the level of discounting reported by the S&P. I mean, let's talk factly. Yes, we're not in the billions. So the manufacturers have written off each year broadly $5 billion on discounted electric vehicles to try and stimulate demand. They've invested billions in the R&D and the investment in plant, which, let's be honest, most of the major European manufacturers have now written off to zero, from what I can see. Massive write-downs. And this is economic madness.
And I mean, just something on as a side on this. I mean, obviously, Perry Moon entered the gay government, and we know, obviously from across the automotive sector, and there was a sort of bit of hope that Perry would enter as a backbencher to give some context, around the automotive sector. But I mean, recently, he's been quite challenging of some of those challenges, both from yourself and Mike Hawes more recently from the SMMT, hasn't he, in terms of, trying to look at it pragmatically and the shift to electrification and how much damage it.
Well, I'm not even so the word pragmatic. I mean, it's actually looking at it with the facts. And I mean, I was quite vociferous with Perry Moon on LinkedIn, as you know. His background is electric vehicle charging. Frankly, the only people in the country who are vociferously against moving on the ZEV mandate are people connected with electric vehicle charging. Now, what amazes me is if we had no manufacturers and we had no retailers, because they'd all been put out of business because no one can make a profit, there is no electric vehicle charging going on. And it seems to me insane that we're even having this debate. The sector should work together, but when you've got a business model like electric vehicle charging companies, which is further what I said on LinkedIn, which is predicated on government mandating a technology and, let's be honest, massively subsidizing that sector, then it creates very entrenched positions because they have to keep that wheel of subsidy and government intervention going, or their business model and their growth prospects and their investment plans don't come to fruition. Now, I could say a lot about that, but that is true.
Well, yes, didn't hold that back on that one.
And the whole of our interview was probably half an hour or so, and it carried on like that, didn't it? There was a lot of ground to cover, and Robert, as ever, had very strong but also very informed views on where we are, how we've got there, and possible routes that we should be taking as a sector.
I mean, the reality is, and we as Curtis said before, we talked to Robert about his business and his outlook and forecast. He's a significant operator within the UK automotive sector. The numbers of employees, the revenue, the property that Vertu has he has value in what he says and his opinion on the impact on his business and the wider automotive business, and that can't be ignored. And you say over the years of knowing Robert, he doesn't hold back. He's very aware of politics and economics and understands that very, very well. And as he said, and he did challenge me on it when I said 130 million investment, but he's right. What's 130 million against billions of money that the sector has been losing since the introduction of the ZEV mandate.
Yeah, quite right, and always good, because it doesn't happen often to have Adam Smith quoted on the podcast, a sort of legendary 18th century Scottish economist who I know, Robert is a big fan of. And it was just providing more context and, a lot of the common sense that's gone out of the debate around the ZEV mandate.
Yeah, so I say we'll keep close to this one as we approach, obviously, October and that consultation output and whatever comes out of it. But we'll see. And another story that we've covered a few times now recently is on AM Online about Pinewood.AI acquisition recommended for approval. Now, obviously, we've seen this over the last few weeks where there was an approach, it was declined, etc. But it looks like this one now has been approved, and this is for Pinewood.AI has recommended a private equity takeover bid to its shareholders. The acquisition offer is £4.48 per share, which values the overall deal at around 545 million. Now, the takeover bid is from UK Piston Bidco, a newly formed company indirectly owned by entities administrated by Ridgeview Partners, a technology-focused private equity firm. I mean, what's your thoughts on this one, Curtis?
You're right. There has been a bit of a backstory to this with, and we've reported about this on the podcast about various deals that haven't quite got through. But this one, as we report it today, as we record today, it looks as though this is going over the line. And within this piece, Bill Berman, CEO of Pinewood.AI, says that he's extremely proud of everything that's been achieved since Pinewood.AI became a standalone tech business in 2024. And he goes on to say that we have created a strong platform for future growth, and we are confident in the significant global opportunities ahead, particularly in North America. And he finishes off by saying that realizing the full potential of the business now requires continued investment, innovation and execution at scale. And we know that Ridgeview is the right partner to support us through this next exciting chapter. So I think that's the real key to the story, the sort of level of investments that the business will need. But of course, this will mean that it'll be delisted. So Pinewood, as we know, was part of Pendragon until Pendragon was acquired by Lithia in February 2024. But what particularly interests me, or is particularly noticeable about this story, are the sums of money involved, because Pendragon, which was once the UK's biggest car retailer, was sold to Lithia for £397 million in 2024, so just 2 years ago. Whereas this valuation, as you say, puts Pinewood at £545 million, so significantly more than the retailing side.
Yeah, and I think the key, an element with this is obviously what this will do to the wider sector and those operators within this sector, because Pinewood have over the years they've got some reasonably sized businesses within it. Obviously, like you say, since it broke away from Pendragon following that Lithia acquisition. Obviously, what does that mean now going into the US through Lithia, through their dealer network over there in the US? But actually, does this new capital investment now give them significant growth opportunities here in the UK and other markets? So I'm sure this is going to be a very interesting one, and what will come out of this long term. But clearly, some significant money on the table that we'll be watching very closely.
And next story is also from AM, and it's also a follow-up to something we reported on probably towards the beginning of the year. The headline is Mitsubishi expands UK dealer network with 24 appointments. So this is Mitsubishi Motors has appointed 24 new dealer partners, taking its UK network to 58 full dealerships as it rebuilds its retail presence around the new L200 Series 7 pickup and the Outlander plug-in hybrid SUV. And these latest appointments include a mix of long-standing Mitsubishi partners returning to full sales representation, as well as dealer groups joining the franchise for the first time, including after-sales only outlets. Mitsubishi now has 117 locations across the UK, which is a much bigger number than I think we would have predicted at the beginning of the year. So my take on this is that Mitsubishi has been doing this very quietly in the background and has gathered momentum, because 58 full dealerships in several months is pretty good going, considering the level of competition that it will have for dealers' attention, certainly amongst the new entrant Chinese brands. What did you make of this?
Yeah, no, I agree. I think there was a question of how could they, after exiting the market and leaving a lot of the dealer network sort of without a brand, would they take them back on? Would they get that appetite back into the dealer network? And as you say, now competing against a lot of the new entrants coming into the sector that are grabbing those open points across the UK market. But clearly, I think we probably dismissed the number of, as you say, those aftermarket, those approved used operators that still remain for. I don't know what the number is off the top of my head in terms of that Mitsubishi used vehicle park still in the UK. Putting the brand back in alongside that makes every bit of sense, doesn't it? I mean, you've got that captive audience of customers, the brand from previous, and it's a very easy move and a very easy transition. So, as you say, I think, we probably didn't expect them to move as quickly as they have, and they've done really well in a very short period of time.
Yeah, and those after-sales only outlets, they must be delighted that Mitsubishi are back, because, as you say, they've got the customer base. And our next story is actually about brand loyalty, but Mitsubishi customers traditionally have been incredibly loyal. So that won't be a hard sell to get those customers back into new Mitsubishi vehicles. So, it's going to be fascinating to watch, and we'll start to see the figures coming through on the SMMT monthly figures, because the new vehicles have only been on sale for a matter of a month or so.
Yeah, I'll have to put them back on my list.
Yes, yeah.
trying to track manufacturer registrations over the years is getting more and more difficult. I'm adding and removing the list all the time, but I'll add them back to the list. But we'll be back with the rest of this week's headlines after this very short break.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Cazoo.
So next headline is actually from JudgeService. They sent the press release into us, and I did work with Neil and the team on this. And the headline is Jaguar named as top mark for brand loyalty, despite dealers having no new cars to sell. So this is some research that JudgeService does on a sort of fairly regular basis, looking at brand loyalty, and this is its in-market brand loyalty research. So Jaguar was found to have the most loyal customers of any car brands in the UK, even though, as we all know, it has had no new cars to sell since the end of 2024. So this research is based on responses from 5,000 car buyers who, and this is kind of the key to it, they made an initial inquiry with a franchise dealer, but ended up purchasing from another franchise dealer, but stuck with their original choice of car brand. And Jaguar topped the rankings with a loyalty of 79%. So 79% of those buyers stuck with Jaguar. And for the Jaguar Land Rover network, this story gets even better because sister brand Land Rover was the second most loyal buy according to customers, with 64% of customers staying with Land Rover, even though they couldn't necessarily buy the initial car from their first choice of dealer. And rounding out the top five there is BMW at 60%, Volkswagen at 58%, and Lotus at 50%.
Yeah, and I mean, it's a great story. As you say, I mean, we talk about brand loyalty, but this really does demonstrate that value of a brand. Because like you say, we see all the things and the challenges that Jaguar Land Rover have had over the years. And to your point, the fact that Jaguar haven't produced for a car for some time, and obviously everyone does question what the future does look like. But obviously customers don't see or hear that, do they? I think they've got that brand loyalty. And as you say, BMW in third position and Volkswagen in fourth position there. And interestingly, as you said there, that Lotus there in fifth position with 50% loyalty to the brand. So, I think when we talk about brands and their marketing and building loyalty, that is a clear demonstration of how strong brand loyalty can be within the industry.
Yeah, definitely. And it's a point that's picked up by Neil Adley, Managing Director of JudgeService, talking specifically about Jaguar. He says Jaguar's achievement is remarkable considering it's been without any new vehicles to sell for over 18 months, while its factories are retooled for an all-electric lineup. And he goes on to say that this suggests that many Jaguar owners are choosing used models rather than switching to another premium brand. So clearly good news there for Jaguar, and we'll see how that pans out when the new electric models start to go on sale. But Neil does actually make the point that, direct quote from him, that brand loyalty does not always equate to dealer loyalty, really highlighting the opportunities open to dealers of retaining more customers by understanding what they want and doing their utmost to deliver it. So, a sort of clear message for franchise dealers there that, really got to understand what their local customers want, because those customers will go to another dealership if they can't find the precise vehicle that they want.
Yeah, definitely. And sticking with dealers and going over to car dealer, is that Arnold Clark completes takeover of family-run car dealership after 65 years. And this is that Arnold Clarks have completed a takeover of W. Livingston's in Uddington dealerships. And the site was run for 65 years under 3 generations of family ownership, and the acquisition is the latest in a string of expansion moves by the dealer group Arnold Clarks. And I think we were chatting before the show here that Arnold Clarks, they just keep taking these little operations, don't they? These family firms that, where there's maybe not a succession plan, or they've just had enough of the industry, etc. But Arnold Clarks are just taking them and very strategically building their portfolio, aren't they?
Yeah, they are, and it was worth covering this story because W. Livingston, as you say, they've been around for 65 years, so well-established business. Clearly, a key name in Glasgow, and within the story, it says the dealership will continue to represent both Seat and Cupra under its new ownership, with the site also including a body shop and petrol station, with Arnold Clark saying that existing employees have joined the group where possible in a bid to provide continuity for customers. So it is interesting just watching Arnold Clark, as you say, just picking up these additional businesses. Not a huge takeover, this one, but significant all the same.
Yeah, definitely. And the final story today continues on previous discussions we've had on the podcast, and we're heading over to Financial Times, and this is Chinese car maker Chery to open a UK R&D centre, saying that the owner of Omoda and JQ brands moves to localise operations in Britain and Europe. Now, obviously, we've been talking about Chery with this MOU with the Nissan Sunderland plant. We talked about Geely and their partnership in Valencia with Ford, and part of that conversation was obviously that these Chinese new entrants, it isn't just about vehicle supply, that they are looking at investing, and this is a clear intent that is the case, isn't it?
It is, and Chery, they are a significant player in the UK because they've got the Omoda, JQ, and Chery brands. And in February, Chery announced the launch of its Lepus brand specifically for European markets. So it's gone from zero to becoming one of the major players in the new car market in less than 2 or 3 years. I mean, the growth has been quite spectacular. So the announcement of the launch of this R&D centre, which picked up a lot of attention in the trade press, but it was the FT that broke the story. It makes perfect sense, because if they can do as much of their R&D locally in the UK for the rest of Europe, then why wouldn't they? And I'm seeing this as a statement of intent. As you mentioned, they're collaborating with Nissan over possible production in Sunderland, but having an R&D centre, it's not a massive leap to local production in some shape or form, be it under a joint venture or them building a site. But it is significant, this one.
Yeah, no, I think if those that are aware, Shanghang, which is a big organisation that are obviously now here in the UK. They've got another model imminently coming out, but they've had their R&D centre down in Birmingham near the NEC for a couple of decades, and I think one thing, talking to Nick Thomas at Shanghang, it gives the Chinese manufacturers that localised understanding of the market, the technology, the consumer requirements. When they're talking about building transmission or suspension systems, they understand, and they've got that local R&D to work on. Like you say, I mean, without going against obviously Chery with this story, but I think with Shanghang, they have designers in Italy, they've got an R&D in the UK, even though it is a Chinese manufacturer. It changes the dynamics of that vehicle for the local market, and that's clear. And as I say, this is an intent into of their investment in local government support, local resource, etc. So I think you're right with this one. I think the long term of this is as the brands build, then the chances are that we're going to see more and more production plants being localized by the Chinese manufacturers in the future very quickly, I suspect.
Yeah, and there's a very telling quote from Gary Lan, who's the chief exec of Chery International UK. who says that the facility was the next step in our long-term plan for the UK. And he goes on to say, we waited over 20 years for the right time to enter this market, and our ambition has always gone much further than simply bringing vehicles here. So a clear statement of intent there, and also showing how pretty much all the Chinese brands are playing a long game.
Yeah, for definite. So that's the headlines for this week. So as we said right at the start there, please do have a listen to the full interview with Robert Forrester. I know he's had a lot of activity on the social channels when it went live this week. If you've not managed to listen to it, then it's always good value. It's worth the 20-25 minutes of your time to have a listen to that interview. As I say, there'll be a link on the newsletter for the full interview if you've not had it already, and we'll put a link to the National Business Motoring Awards, as I said earlier, coming up in November of this year. Please do nominate your business or other businesses that you feel would be worthy of some of the awards that will be handed out on the evening of the awards night. So yeah, lots to get through, isn't there?
Yeah, well, another headline-packed show, but that really is all for now. So many thanks to you for listening to this Motor Trade Radio podcast. Until next weekend, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Cazoo.